The global financial crisis was a widespread economic downturn that began in 2008 and resulted from the collapse of the housing market and investment banks. When the financial system, or the economy as a whole, undergoes a rapid and large decline, it is said to be in a financial crisis. Financial assets like stocks, bonds, and real estate often see a sharp and significant decline in value during financial crises. They can also be identified by a decline in credit availability and a loss of faith in financial institutions like banks. Financial crises can be caused by a variety of factors, including: this article will discuss the global financial crisis, GFC, of 2007 to 2008, its main causes, and how the financial crisis impacted the economy. The global financial crisis of 2007-2008 was a major financial crisis that had far-reaching impacts on the global economy. A housing market bubble, unethical subprime mortgage lending practices, and the overproduction of sophisticated financial products like mortgage-backed securities all contributed to its cause. The subprime mortgage market in the United States, specifically, served as the catalyst for the 2007-2008 global financial crisis. Loans with risky lending terms and high interest rates were given to borrowers with bad credit records under the phrase subprime mortgages. A housing market bubble in the U.S. was brought on by the rise in subprime mortgage loans and the subsequent marketing of these loans as securities. Many borrowers were unable to make mortgage loan payments when the housing bubble eventually burst and prices started to plummet, which sparked a wave of foreclosures. The value of mortgage-backed securities decreased as a result, and the global financial system experienced a liquidity crisis, which set off the GFC of 2007-2008. Due to the crisis, home prices significantly dropped, there were a lot of foreclosures, and the credit markets were frozen. This in turn sparked a financial crisis that required government intervention and bailouts, as well as a global recession. The crisis effects were felt on a global scale, causing widespread economic distress, as well as a fall in employment and economic growth. The financial crisis spread quickly over the world as a result of the financial market's globalization and the links between financial institutions and nations. The following are the primary reasons for the global financial crisis of 2007-2008. The consequences of the global financial crisis of 2007-708 were far-reaching and long-lasting. Some of the most significant impact of global financial crisis on world economy include: Bitcoin was partially created as a response to the global financial crisis of 2007 to 2008. The financial crisis brought to light the weaknesses of the established financial system and the risks of reliance on centralized financial institutions. The creators of Bitcoin, BTC, who went by the alias Satoshi Nakamoto, created the digital currency with the intention of building a more secure and stable financial system that was not vulnerable to the same kinds of hazards as the conventional financial system. The invention of Bitcoin and the emergence of cryptocurrencies and blockchain technology that followed are considered a rejection of the existing financial system and a direct response to the negative effects of the global financial crisis of 2008. The public ledger that contains records of every transaction on the Bitcoin network makes it simpler to track and keep tabs on the movement of money. This aids in the suppression of dishonest behaviors, including insider trading, market manipulation, and other unethical actions.